What's going on here, Sue? What did Micron say?
Well, Micron is saying they are not going to be able to make their revenue projections. And of course, the last thing the market wanted was yet another chip maker, let alone the biggest U.S. memory chip maker, to say that demand is falling off rapidly. And that's what Micron did in the U.S. Tuesday market. Earlier in the day, at a regulatory filing, Micron said that, quote, significant sequential declines in revenue and margins is what they're seeing. And it's warning that fourth quarter revenue won't meet projections, set those industry stocks tumbling. Again, as mentioned, this follows the NVIDIA warning on Monday. There were weak reports by Intel and other chip makers this earnings period. And the majority of the pain is being felt by companies that make PC chips. It's consumer demand that's really driving this downturn. You've got the pandemic lockdowns over, so there's not that demand for PCs that there was 1 or 2 years ago. And number two, household budgets are being hammered by inflation. Now, like Intel, Micron now plans to reduce capital spending on new plants and equipment this year, and projected capital expenditures will be, quote, down meaningfully from a year ago. Now, both say they're committed to long-term expansion plans, but they're making short-term adjustments to protect profits and avoid a glut.
Sue, what's the drag to the NASDAQ, which has done well and would have done better were it not for this latest pain that we're seeing across at least some of these chip makers?
Yeah, this latest pain is making the chip stocks a real pain for some of the assets that are now trading. Let's take a look at the Bloomberg chart of the SOX, the Semiconductor Index. It is now below a key technical level, down 27% this year, dropped 4.5% on the Micron news, with all 30 members in the red in the latest U.S. session. Now, the decline was the worst in more than a month because you've got investors now fleeing the sector, and all of this highlights why chips have been a drag on the broader NASDAQ stock index. You've got, of the 10 worst performing stocks on that index, 7 of them are semiconductor stocks. So as we're seeing the rebound in tech, yes, this is keeping that index from moving higher. One tech analyst said it appears to be a challenging market for everyone after both NVIDIA and Micron, two of the very big players, had to slash their outlooks. Back to you.